Okay, moving right along. Thanks, Earl. Okay, planning for medical corporations. So I'm going to go through this very quickly. This is actually a fairly long presentation to cover in the half hour, but let's just jump in. So those of you who've been involved with this group, back since 2016, we've had a whole series of issues that have developed with claims for medical professional corporations and dental professional corporations. And they looked at a whole series of issues. One of the key ones was, how do we treat what they call AFP funding or APP funding? And is this a government assistance? How does it affect the claim itself? We also looked at whether, an individual doctor is being contracted to the SR&ED or the medical professional or dental professional corporation itself. That issue was resolved about a year or two ago in a case called Dr. Lamy MPC, which we talked about, and leaded to a number of other issues. The issues that we're going to focus on right now are on talking about the APP-AFP issue, which still may be around, and how to deal with that. We'll talk about proving input on protocols, and we'll talk about some of the other structures today that are indicative of how these types of firms both are structured and how that's going to affect the SR&ED itself. Okay. So we'll talk about, as I said, the various organizational structures. We'll talk about sources of funding. We'll talk about whether to pay yourself wages or what they call a third-party payment. We'll talk about some of the other reporting options and recommendations. Okay. So as we said, back in 2020, I haven't mentioned this, there was a paper released for the medical industry. This resolved some of the problems and maybe brought up a few others, and it was addressed by the Dr. Lamy case. One of the key things is, they looked at whether the individual physician was doing the work or whether it was by a corporation, MPC or DPC, in the case of a dentist. Okay, we're going to focus on just the second part, the MPC DPC issues, since generally speaking, the individuals, it wouldn't be a lucrative way to claim it. You always want to claim through a corporation. Okay? So that paper had a series of tables, and in the tables dealing with the medical professional, the MPCs, what they call scenario number 2, they talk about a series of different scenarios. So where the MPC is doing the work itself directly, where it's doing it for someone else, where its employees are doing the work for someone else, but it's not, or the one that we'll talk about today, where it's doing work for itself and perhaps for other people at the same time. And what are the effects of those different structures as well as the effects on the claim? Okay. So one of the key things is where it's doing work for other parties, there may be funds coming in or payments coming in that are considered either government assistance or contract payments, which would reduce the claim. And we're going to talk about that and illustrate it, as well as talking about some planning ideas on how to get around it. Okay? So some of the range of structures that we see can vary, and this will have various effects on how to put together and optimize a claim, in my opinion. So at the one scale, you'll have a full-time researcher or a practitioner at a research hospital. And when I say full-time research, they may still do clinical work, see clients and stuff like that, but a large portion of their work is often research within a team. So a typical thing was there might be a hospital like Sunnybrook or Mount Sinai or whatever the case may be. They'll be in a group, cardiology, for instance, where the group gets funds and then they pay their various MPCs of the doctors or professionals that are in there. And then the MPC pays the doctor his or her wages through it. So there's a multi-stage process. Another scenario that's common is the doctor or dentist will have his or her own practice somewhere and also work at the university, maybe a couple of days a week. Okay, so that it's kind of a split one where it's not totally all within the hospital or research organization. There's kind of a dual part. And often the work at the university is done as an individual, whereas the rest of the work is done as an MPC. And the third common scenario they see is an independent practice where you have a professional corporation or dental corporation, and they will create their own projects, okay, and run it independent of colleges, universities, etc., and hospitals. Okay, so we'll talk about those and how to optimize each of those claims. So one of the first things that the Act says itself is the taxpayer would have to reduce qualified expenditures where it's reasonable to assume that they've recovered money or payments in relation to those. Okay, so one of the things that we saw up to about 2020 is the CRA was taking the position that certain types of funding, what they call AFP or APP, alternate financing or alternate payment plans is usually what that stands for, would be considered SR&ED related. Okay, so they'd say, you know, this AFP funding or some say surgical repair funding or whatever is considered to be part of government assistance, and we're going to reduce it from your qualified expenditures. Okay? We'll talk about that. Some of the key points here is the CRA took the position, as per its policy, that if assistance was received and you couldn't reasonably estimate what the amount was, 100% of the amount was deemed to be assistance. Okay, and the second thing is that they were also looking at not exactly what percentage of the doctor's research time was SR&ED, but in fact, if their contract stated that they should spend a certain amount of time in SR&ED, they were automatically using that allocation. Okay, so we'll talk about what the effects of that were. The other guidance things that they look at and the information that they were asking for up until about 2020, I'd say 2018, where this started to get a little more stable, is verbal agreements. Do you have an obligation to perform research as per your contract? Who pays for it? Things like that. They would typically do what they call a request for information, an RFI, where they would ask you for all these things. What's your business activity? What are your contracts? Are there agreements between the physician and the MPC that stipulate at any point how much of your time should be research versus how much should be other kinds of clinical activities? And as importantly, how are you funded for this? Okay? So taking a look, let's take a step back then from the CRA's position. And this is kind of one of the arguments that we made years ago, we'll reiterate it, is I'll just look at Ontario, but it's very similar in the other provinces as well. There's a little paper here that talks about what is an AFP or APP practice model. And effectively, those are models that are designed to include teaching and research and being a specialist and whatever. So basically, if you're a specialist or for a variety of other factors, you may get a premium on what you're paid versus what a general practitioner would be. Okay? So the things that an APP or AFP model is looking at is, as we said, if you're a specialist in an academic health area, and it could be other factors too. If you're in a remote area, if you're working overtime to provide 24-hour services, there's a whole variety of factors listed here, which could all contribute to your APP payments. If you're at an academic health center, it's for clinical services, education, and research, right? So arguably there is a component of it that's research, but there's a strong argument that it's not all research. It's got a whole series of activities that it covers. So the real question is, what percentage, if the APP or AFP applies as SR&ED, is it reasonable for the CRA to say 100% is in? Or how, if not, how do we reasonably allocate that? So maybe we say, well, you get $100, 25% of that's related to me being a specialist. 25% is related to the education activities that I do. Maybe 25% is research, maybe 25% other factors is listed there, being in a remote area, working off hour, et cetera, and so forth. So one of the key things is the CRA's position was, if you can't do a reasonable estimate, we'll assume 100%. Which again, I would argue is probably unreasonable itself, but that was the position they had before, which they've tended to back off in the last 5 years, and we'll talk a little bit more about that. All right. So what I'm going to do now is I'm going to illustrate some of these problems and issues using a published judgment that we looked at before, the case of Medical Professional Corporation of Dr. Lamy in Hamilton. And this was a great court case for illustrative purposes, as well as resolving a lot of the issues that we're talking about now. Okay? So in the Dr. Lamy case, there was two main projects which were split into really 2 to 4 projects, but we'll call it 2 main projects that were sponsored. And the ruling was that Dr. Lamy was eligible on all the projects. Okay, so even though there was strong evidence of technological eligibility, we'll see there was challenges both on whether he was making technological advances himself and how you want to address those, as well as funding issues on that and how we can address those. Okay. So going real quickly through the case itself, his background was that he'd been working 23 years with the Health Sciences, Hamilton Health Science Center or Hamilton General Hospital. They kind of use those terms intermittently. He was a cardiac surgeon, and he would perform his work at home and at office and at the hospital. So he had a couple different locations where he would be doing that work. Okay. The SR&ED, or the research that he did, was directly integrated with his cardiac surgery. I'm going to talk about why this is important later. Okay, so that his ideas or hypothesis of what to work on was a result of his experience with his patients. Okay? And they were mostly focused on new techniques to decrease complications arising during surgery, so the techniques itself, or which medications in combination with that can improve the survival of the patient. We're told that during the past 22 years, he worked 7 days a week, okay? And he was incorporated in 2008, and he did all his work in his corporation since that time. So he's at the left end of that model. He's the full-time researcher at a research hospital. He's which typically means that all of his funds are collected by the hospital and then paid out, allocated to his professional corporation, usually at some percentage, 70, 80% are typical of that. Okay. Then Dr. Lamy's MPC would in turn pay Dr. Lamy wages, and those would be the eligible costs that he would claim on. We're told that during the years in question, he spent approximately 52 and 57% of his time working, so we'll assume an average of 55% for our calculations. Okay. We're told that in addition to his work in the MPC, the only other work he did was he would teach. We're not told how many hours a week, but he would do teaching work at the hospital, but he was paid personally for that, not through his MPC. Okay? So that's fine. So one of the first things that we got to look at is how many hours is Dr. Lamy available for work? Right? And we're not really told in here, but we're told he works 7 days a week. Okay? So looking at this is an important base because we want to figure out, what percentage of his salary and how to allocate time. So a normal working week might be 40 hours a week, and with vacation and holiday pay, 80 hours a year. So if we apply that and assume Dr. Lamy did 200 hours personally teaching, that the balance of his time would have been professional, we can see different assumptions. If we assume he works 8 hours a day, 5 days a week, he's probably got 1,800 hours at the end of the year. If we say, maybe he's 12 hours a day, 7 days a week, which sounds ridiculous, but if you talk to some people in that industry, resident doctors and stuff, that may not be completely unreasonable. He or she may work 4,000 hours a year. Again, we don't know, but those kinds of calculations are going to be relevant in determining how we're going to allocate the cost at the end of the year. So that would be one of the starting points that we want to look at. Okay, so doing a quick hypothetical calculation, we'd say here, let's say that Dr. Lamy's paid, he works 400 hours a year for the university doing teaching and research. We'll say half of that's teaching and half of that's research. So out of his 400 hours a year, 200 is teaching and 200 is SR&ED. We'll say he gets paid $50,000. half of it's SR&ED. However, we're not going to claim any of that because we're not going to claim as an individual, and he would have been paid. We'll now go to the second part, which is in addition to his teaching and research duties as an individual at McMaster University, he's also doing his regular surgery work and research through his MPC, being contracted to the hospital. And we'll assume he does 2,000 hours a year. We don't know. We're not told in here. And that we'll assume he's got a salary of $350,000 a year. Again, we're just assuming that. Under that assumption, and we're told he's 55% SR&ED on average on a $350,000 salary, his SR&ED wages would have been roughly $192,500 a year. So the total eligible expenses would be zero as an individual for the teaching and research he does in the university, and $192,000 roughly through his MPC. Okay. Now, one of the very interesting things of the case is we're told he's not paid for his research. Okay. So we're told that there was a contract on the coordinated project. It was funded by a Canadian Health Research Institute. And in the agreement, it says that he was going to be paid, Dr. Lamy was about to be paid a certain amount per patient. However, Dr. Lamy testified that in order for him to be paid, he would have to complete a form, which he did not complete. So he voluntarily did not collect money that he would have been entitled to, okay? Which is important here. Had he got that money, that might have reduced the eligible expenses. Okay? So just a quick overview of the project. He was trying to do work on the coronary project. He was trying to do work to determine whether having an operation done using what they call two different methods, on pump or off pump methods. So when they're doing the surgeries, whether they keep the patient on a heart pump or they do it a different way would result in different results depending on comorbidities. And that was the hypothesis. Now, this study was done with 600 researchers all around the world, of which Dr. Lamy is one of the principal investigators. And the hypothesis here was that a series of factors, cerebrovascular disease, diabetes, Euroscores, left ventricle function, and the number of vessels disease, that various combinations of those factors would lead to one or another method being favorable in that particular case. And that was the hypothesis that they were trying to test worldwide, and he was part of that study. Okay, in addition, Dr. Lamy did work on an internationally funded project on behalf of a company called Bayer. And we're not provided with the same kind of information because it's not publicly funded. But similarly, for payments to be made, he would have had to fill out a form. He chose not to fill out that form, so he did not receive the additional payments. Okay. So the first question is, why wouldn't you take money? Someone's trying to pay you money and you're not taking it. That seems a little abnormal. And that's what I would think, as an accountant. However, when I talk to researchers in the industry, there's almost a culture of research that, hey, you know what, you have an obligation to do this, and you should be doing this for free. So again, this seems abnormal, but when you look in that culture of those doctors and dentists at that level, there seems to be a culture of being willing to do a certain amount of work without being compensated if it's in nature of SR&ED. Okay, it will really lead to direct improvement in their clinical process. It might lead to them getting more and more studies, etc. There could be a number of reasons why they would do that. Okay, so I haven't spoken to Dr. Lamy. I don't know specifically why he did that in that case, but it is something that I see in the industry, which is different than most industries. Okay, so looking at options for AFP allocations, how can we do it? So one of the main things is we could do it on actual time spent. We're told 55% for Dr. Lamy. The expected time, let's say in his contract, he's expected to work 60% of the time, or more often in the annual reports. Okay? So one of the things is the AFP is often determined at a group level. So the researcher will get a statement from the hospital or university at the end of the year, and it will say, here's how much your group got, whatever, cardiology group in this case, X dollars of OHIP billings, X dollars of AFP, and then other sources of funding. So the AFP, the OHIP billings would be the actual clinical work. The AFP would be the R&D and all the other factors that we talked about, and other could be any other number of things. Okay, so in this flow of revenue expenses here, We have the group allocations. We say the AFP out of the total billings is maybe 20%. Okay? Out of that, let's say assume that the MPC for Dr. Lamy was received 500,000. We're not sure how much, but let's just assume that. And the FP portion would be 100,000. Okay? At which point, using our assumptions earlier, 25% of that would have been R&D related, so only 5% of the total payments would be SR&ED. Then what we could do is say, well, we paid $350,000 of wages, 55% are eligible, and 5% of that, then the expenses would be the related government assistance related to the AFP. Okay? As opposed to, so $9,000, as opposed to the CRA position, which might be that 60% is in the contract, the MPC received 100,000 of AFP, so 60,000. Okay? So what is it? Is it 60,000? Is it less than 10,000? There's a big variance there depending on certain assumptions. So the difference is that the CRA is using the full contract amount, whether it's the actual or not. They're using the total AFP, not the amount of actual expenses, and they're not prorating it by any amount. Okay, so these are all issues that there's no right or wrong here. They're still sitting out in limbo. Okay? More and more often, what we're seeing, the actual associates report will say distributions to the MPC, and it might even say SR&ED related. It will say a number, often 0. So in that case, I'd say maybe that's the number that we want to use. Okay? There's lots of arguments to say the AFP shouldn't be allocated at all. Okay? One argument is to say that maybe the OHEP billings only took 45% to make that 15 million. So it represents 75% of total money, but only 45% of time. And the AFP money represents a large part of time, but a less portion of billings. So you could argue that the doctors are being forced to use their OHEP money, their clinical time, to subsidize the AFP. So again, there's all kinds of things that really call into question how much of the AFP should be allowed, and maybe this should be discussed a little more. Okay? So as we said, some associates reports are saying AFP right in them now and allocating 0, which tends to be one of the new things that have come up on how to deal with this. One of the questions is, what if Bayer, I'll try to speak this up, what if Bayer paid Dr. Lamy directly, so it didn't involve the hospital? Okay? So would that be a contract payment? The issue here is if it's Bayer International, contract payments are from government or a taxable supplier. To be a taxable supplier, you have to file a Canadian tax return. So if it's a foreign source contract payment, that still wouldn't affect it. So he could have actually billed Bayer, got the money, and still claimed all of those things. One of the last things is the scope of eligible activities includes things like mathematical analysis, data collection, and testing commensurate with the needs of the projects. So as we said, Dr. Lamy's research is integrated with his research. What if while he's doing surgeries, there's issues that help him address some of his clinical or some of his research areas? Is that clinical time or is it research time or is it both? So these are things that we want to consider. One of the other big things that I'll talk about here, and then we'll wrap it up, I'm going to do this real quick, is what they call third-party payments. So a third-party payment is usually where you initiate a project and you have a university or third party do it. There's a simplified reporting method, third-party payments form, which we can go through here, which is very easy to fill out. Basically says, what did you do, who'd you pay, how is it related to your business, how are you entitled to exploit. Examples that they give of third-party payments would be paying, an industry-wide research chairs, a physician paying funds to a medical research facility in their field of specialization, a pharmaceutical corporation paying a university for drug research, all where they have entitlement to exploit. Okay? They give examples of things that would not be third-party payments. So a physician making payment to a general fund of a university where we can't be guaranteed that the funds are all SR&ED, that would not be allowed. So again, it's things that we want to contemplate. One point here is the third-party payments are only 80% eligible for SR&ED. So only 80% of that payment qualifies for credits. Okay. So one of the stipulations is if we make a payment for SR&ED, it has to be 100% related. Okay? If it's a combination of work, it won't qualify. Okay? It's got to be related to the business of the taxpayer, and you have to be able to exploit the results. Exploiting the results is it doesn't mean you have to own the results. It means you have to have a preferential right to distribute or market the product, or preferential results, such as if you're a principal investigator of the study, you're privy to the results before they're published. that would be entitlement to exploit. Okay? So the IP is often a red herring. You don't need to own the IP, but you need entitlement to exploit. One of the other big things here, I'm trying to wrap this up, is that with payments, you can have what they call direct funding contributions, funding of students, or payments in kind. Payments in kind is if a property or service is provided and you can determine the fair market value, you can claim that as opposed to actual cash payment. As long as it's unconditional, there's no repayment terms, and it's not for capital equipment. Okay? Now, federally, you'll get the credits for third-party payments, but some provinces such as Ontario say that it's got to be payment of money, not a payment in kind. So these are factors to look at. One of the other things is payments of what they call research shares. So payment to a third party, they say can be in if you can clearly identify the SR&ED part. One of the exceptions is what they call an NSERC, National Science and Engineering Research Council research shares, which are usually automatically eligible because that's one of their criteria. So they're already in. Other kind of research shares, you have to establish what's in. Okay. So basically, they want you to document how much you paid, fill it out, and have the information to support that available. Okay. The main payment between third-party payments and contract payments are the degree of control at the end of the day. That a contract payment, usually the payer controls it, whereas a third-party payment, the university may do it as part of a consortium or something, and they're often more in control. Okay? So if you have payments, things like NSERC, MyTap, stuff like that, you may look at claiming those for the work. Right? A quick comparison of third-party payments and wages is done here. So if we paid wages versus Dr. Lamy's case, where you'd have wages $192,500, overhead of roughly 55%, proxy overhead, so roughly $300,000 of costs. If we say we can pay that in as a third-party payment, $300,000 in kind or cash, being 80% eligible, we'd have $240,000 of qualified expenses. As we mentioned in Ontario, they'll only pay you on the cash type of payments, not the in-kind payments. So at the end of the day, if Dr. Lamy paid himself the wages, he would get $126,000 in Ontario. If he did in-kind payments, $101,000, and if he did cash payments, $130,000. So these are the kind of analysis that you want to look at the end of the day. Okay. So some of the planning ideas, if you're in clinical trials, is a third party or payments. In published studies, be specific about the kind of work that you're doing. Clinical treatments, size and scope, and if you're doing brainstorming or applied research, if you can attribute that work to pre-existing projects, that time would be eligible. Okay. So if you work within a team, one of the key things is, like in John Lamy's case, you're just one of many investigators. What you would want to do is talk about what the team did, but also be specific about what you did within that team. Okay. In this case, one case they argued, and they'll make the argument that many of the larger studies, they may really just be paying you to get your patient data, and someone else, such as, maybe in the Bayer study, Bayer would pay you to get your client data or patient data, and their scientists would do all the research. So you're just collecting data, you're not actually analyzing it. So you want to show that you're involved in the protocol development and giving feedback. Okay? So one of the options, if we don't do the T6, or if we don't do the third-party payments, is how do we claim the work on this kind of cooperative research? One of the things I recommend is, in the T661 form itself, it asks you to do work in collaboration with other businesses. I would argue you could say, yeah, I'm doing it with whatever, U of T or whichever hospital. In the description itself, box 240 to 242, explain that work was done. And then in the research steps, be specific about what you did within the scope of the entire paper. Okay, I'll leave it at that.